Hello, my dear friends. How are you all? Hope so. All of you are fine. And today we are going to start with some examples, some of the cases relating to your final accounts. Okay, we have done a lot many questions. I have given you some homework also, in which you need to do the questions which were preparation of your final accounts, that is your P&L, balance sheet, etc. Okay, so I hope all of you have completed those questions and you have done these questions. If you have any doubt, please let me know, and also let me know if you are able to see the screen, hear the video, hear the audio, and see the video. Is everything okay? Okay, guys. Let's start with our discussion. The main discussion today I'm going to do for the special topics of your final accounts. There are some topics which do not see um, independently, but they are asked in the question of your final account. So that needs to be learned, or that needs to be practiced very, very carefully. So one of them is the bad debts. Although I did one of the example in the chapter number 1. If you remember, I prepared a account for provision for doubtful debts. That is called provision account. That account is basically nothing but a liability account. Okay. Or I could say this is a nature of a liability, but not exactly a liability in itself. So, provision for doubtful debt is some amount that we are keeping aside for some debt, for some debtors which might not pay us in future. For example, so examples are the greatest things that we learn. So let us understand by an example. So the company name is A Limited. A Limited sold goods to, let's say, three persons. Mr. X, Y, and Z. There are three persons to whom Mr. A Limited has sold the goods. A Limited A Limited has sold the goods to X, Y, and Z. For example, they sold goods worth rupees 10,000 to Mr. X, 11,000 to Mr. Y, and 30,000 to Mr. Z. So in total, how much amount they have sold? Sir, it is 51,000. Now, from the past experience of A Limited, from the past experience of A Limited, they very well know Mr. X, Mr. Y, and Mr. Z. They know that whatever amount I have raised to Mr. X, he will pay the full amount. He will pay the full amount. And even Mr. Z will pay me the full amount. He will also pay me the full amount. But Mr. Y, he always takes some discount. And right now I have raised a bill of 11,000 to Mr. Y. He will only pay me rupees 10,000. He will only pay me rupees 10,000, which means what? Sir, he will take a discount of rupees 1,000. He will take a discount of 1,000. So whether have I given the discount? The answer is no. If I have given the discount, so I will bill only 10,000 to Mr. Y, not 11,000. So if I billed 11,000, that means I need to take 11,000 from Mr. Y. And if he's not going to pay me full 11,000, that means 1,000 is lost. 1,000 is lost. That is, that debt has become bad one. So that debt has become the bad one. So that is why it is called bad debt. Okay, that is the loss which we are incurring from our debtors. Loss from debtors due to non-recovery of the due amount. Due to non-recovery of the sales amount. So whatever amount was due, we recovered less from it. That was 11,000 minus rupees 10,000. So there is a loss of rupees 1,000. But, but, now there is a twist. What is the twist? Now listen carefully. I have sold these goods on 30th of March 2021. So right now, which financial year have I sold the goods? Sir, I have sold the goods on year 2020-21 because it will end on 31st of March 2021. So let's say this is the timeline. This is your 1st of April 2020. This is your year end 31st of March 21, and I have sold the goods on this date, which is 30th of March 2021, before the year end. Now, this payment is not payable when the goods are sold, it is payable after 2 months. So this payment will be due on this payment of rupees 11,000. This payment of rupees 11,000 is due after 2 months. That means it is due on 30th of May 2021. And now 30th of May 2021 is in the next financial year, which is 2021 and 22. Now very carefully understand the concept. We are booking our sales. We are booking sales in which year? Sir, in 2020-21. And in 2021 only, I know that Mr. B or Mr. Y will not pay me the full amount. He will pay me only 10,000. So I know that I'm going to incur loss of 1,000 rupees in future. So I will not wait for the future because of the matching concept. Sir, what is the matching concept? Matching concept says that current year revenue or current year income should be adjusted with current year expenses or current year losses. So whatever is in the current year, you need to taken care of it. But in future, it is a possibility that Mr. Y will pay me the full amount. So I am not writing off it as a loss, but I am creating a provision for it. That in future there might be a situation that Mr. Y will not pay me the amount. So let us book it as a loss right now. Let us book it as a provision right now so that it can be adjusted with the realization of whatever amount the Y will pay in future. So what I will do, I will create one journal entry. The journal entry would be basically your P&L account will be debited with 1,000 rupees, and there would be a creation of provision, that is provision for doubtful debt, 1,000 rupees. This will be the journal entry which I will do. And by this journal entry, 1,000 is being booked as an expense in the current year to match the current year revenue. Okay, but in my balance sheet, I will write debtors. Total debtors were, sir, 51,000, out of which I think 1,000 will not be received because it will be loss. So I will deduct the provision for doubtful debt from this debtor amount, and net I will write 50,000 in my asset column. So that is the presentation that we are going to do. That is the 360-degree view of the situation of provision of for doubtful debts, bad debts. There might be a case that in future the loss is not just 1,000, it is, let's say, 1,500. That means Mr. Y has paid me 49, sorry, not 49,000. He has paid me 9,500 instead of 11,000. So my loss is 1500. Out of 1500, 1000 is already charged in year 2020 and 21. So balance 500 will be charged in 2021 and 2022 as bad debts. This will be your further bad debts. This will be called as further bad debts because already 1000 we have made a provision, but after that extra 500 will be further bad debts, and this will be charged to the current year P&L rupees 500. I hope that makes sense to you. Is there any doubt, anyone? Is it clear, my dear friends? So that was the whole exclusive concept of your bad debts. Bad debts, obviously, the one you are not receiving the money, that is bad debt. Doubtful debt, you are doubtful that money will be received or not received. And good debts, you are confident that full amount will be received by this amount. Okay. So when we sell the goods, that is debtor account debit to sales. When we receive the cash, that is cash account debit to debtors. But if I need to book some bad debts, so my debtors will be reduced and bad debt account will be debited, and this bad debt will be transferred to the P&L account. So that is the very simple concept. Okay, sir, can you go through it one more time? Let us understand it one more time. So what was the situation? A Limited was a company for which we are doing the accounting. A Limited has sold the goods to three person, Mr. X, Y, and Z. To Mr. X, they have sold 10,000 rupees of goods. To Mr. Z, they have sold 30,000 rupees of the goods. There is no issue with Mr. X and Mr. Z. They will pay me full amount. That means full 40,000 I will receive from X and Z. But there is one more person, which is Mr. Y. Mr. Y is such a person who will not pay me in full. I need to take 11,000 from Mr. Y, but he will only pay me 10,000 rupees. From my past experience, I can say that he will not pay me the full amount. He will take a discount of 1,000. But is this discount I have given him? Answer is no. I have given him the invoice of 11,000 only. That is not the discount I have given. But he will push me. He will say that I cannot give more than this and everything. He will try his part of negotiation and everything. And then he will say that I am only going to pay you 10,000. 1,000 is not going to be paid. So can I say this debt is not good? So that means it is called a bad debt. Do I know this bad debt when I am doing the sales? Yes, I know. From the past experience, I know that he does not give me the full amount. He always give me some portion of it, not the full amount. So I know that this will be a loss in future. So in the current year only, in the current year, whenever I was booking my sales, I'm going to create a provision. I'm going to create a provision of 1,000 rupees by debiting my P&L account, by debiting my P&L account, that this amount is doubtful. It may not be received in future. So when future comes, what I will do, I will check what amount is received. So let's say Mr. Y has paid the 9,500. I was expecting that he will pay 10,000, but in actual he has paid how much? 9,500. So I have booked already provision for 1,000 from in the previous year, but extra 500 will be booked as a further bad dates in the next year, because obviously this I don't know in the past. This I came to know when he actually paid me the amount. So that is why this is called further bad dates. Okay, and for this we use the provision for doubtful debt account. That was the overview which I given. But if no provision has been made, let's say no provision prepared. So what will I do? I have made a sales of 11,000 to Mr. Y. So obviously for booking the sales, Y's account will be debited with 11,000 and sales account would be credited with 11,000. That is the first entry I will do. Second entry, if Y has paid me some amount of money. So let's say I have received 9,500 in my bank account to Y's account, 9,500. Now, Y has said that I have paid you in full. This is the full amount which I have paid you. Actually, he needs to pay 11,000, but he has said that I have paid you 9,500 and this is in my full settlement. So that means balance amount he will not pay. He will not pay means what? I need to write it off as a bad debt. So what I will do? I will book the bad debts account debited by 1,500 to Y's account by 1,500. Now you see Y's account was debited with 11,000, then Y's account was credited with 9,500, and now Y's account is again with credited with 1,500. Now Y's account is completed. The balance is matching 11,000 and 11,000. But this bad debt is a loss. This will go to your P&L account. The fourth entry would be P&L account debited with 1,500 to bad debts account 1,500. So that was the all treatment when there was no provision. Sir, what if we made the provision earlier? So now your bad debts would be only 500. Sir, how? See, the first two entry will be same. There would be no change in the first two entries. First, we will make a sale of 11,000 and bank account debit 9,500 to Y's account 9,500 that we have received 9,500 from Y. The third entry will change over here. Now we know that he's not going to pay me that amount. So I will adjust that amount from the provision. Provision for doubtful debt account will be debited. So I had already created a provision of rupees 1,000. But how much amount he has not paid? Sir, he has not paid 1,500. So his Y's account will be credited by 1,500 only. So what account need to be debited for 500 so that all the debit and credit side will be matching? So it would be bad debts account. So bad debts account would be 500. Sir, in the earlier example, bad debts account was 1,500 and in this example, it is coming to be 500. Yes, beta, because 1,000 is already booked as a loss in the previous year. So you don't need to book it again. You cannot claim one expense twice in another in different years. Okay. So now what would be the final entry? So the final entry would be 3B, I would say. It would be your P&L account debit with only 500 rupees to bad debt account with 500. Sir, what about the remaining 1,000 that is already gone to P&L in the previous year? That's it. Nothing to be done right now. I hope I'm clear now. Okay. Okay, guys. So this was the concept of your bad debts, and you can try some examples based on this. This was the provision for bad debt, which I already explained to you. So try to solve illustration number 18. Okay. And you will have a good practice for this illustration number 18 and also do it 19 as well. Okay, that would be for the provision for bad debts, and same concept will apply for provision for discount on debtors. There would be some cases where customer will ask us discount after being the goods are being sold, so that's also created just like the provision for doubtful debts. Okay, so discount allowed is nothing but discount allowed to debtors. That the general entry we do, and the when discount allows it's transferred, so it would be discount allowed account debit to sundry debtors. That is the same they are doing. But when we create a provision for discount, so we will debit our P&L. We will debit our P&L because this is an expense, and we will create a provision whenever we need to provide a discount. Okay, and when discount will be provided, it will be adjusted against that. Okay, just like your provision for doubtful debt. So there might be some cases where you have a recovery of bad debts. Recovery of bad debts means what? That means we earlier thought it is a bad debt. but now the person has given me money. Let's do one example for that. Let's say Y needs to pay 11,000, but he actually paid me 9,500. So how much loss I have booked in the name of bad debts? Sir, I have booked a loss of 1,500. This is the loss in my profit and loss account. Now, after 2 years, Mr. Y has won a lottery, and now he thought that let's pay to those people who I was not able to pay 2 years back. Now he found that he has paid 1,500 short to A Limited. To A Limited, he has paid 1,500 short. Now, after 2 years, Y paid rupees 1,500 to A Limited. That means the bad debts which was booked earlier is now recovered. Bad debts is recovered. So what shall be the journal entry? So in the earlier year, I booked it as a loss. In the current year, it will be booked as a profit. How we will book this? Obviously, if you have received some amount, so bank account will be debited or cash account will be debited with 1,500 to Y's account because it is received from Y. But Y's account did not had any balance. We already squared off the Y's account. So whatever we have received, that is our profit. Y's account will be debited with 1,500, and then we can transfer it to the bad debts recovered account, that is 1,500. So bad debts recovered account is credited. That means it is an income. And finally, it will bad debts recovered account will go to P&L. Bad debts recovered account debit to P&L. And whenever P&L is credited, that means that is an income for you. So this is the journal entry for bad debts recovery. That is a specific point which I need to explain you guys. Okay, that was about bad debts recovery. Moving on. Now, now the special topic for today is now here. Preparation of the financial statements of a non-trading concern. Sir, what do you mean by a non-trading concern? So trading concern is nothing but who deals with goods or services and whose objective is profit earning. Whose core objective is profit earning. Okay, but now if we have a non-trading concern, for example, there is gymkhana or a sports club, educational institutes, public hospital, libraries, cultural clubs, religious institutions, and charitable trust. So there are some institutions which are for not for profit and some are for profit. Some are for profit. For example, these sports club, gyms, educational institutions, public hospitals, libraries, cultural clubs like Rotary or Lions Club. These all are for profit also, but these are for the development of members. Okay, so all these non-trading concern, they do not have a shop or something, but they have their own offices or buildings or amenities. These all non-trading concern. They have some receipts. They have some receipts of income, and they have some payments, obviously. Sir, what would be the receipts? We can say they might get a donation, they might get a membership fees, Okay, they might get a tuition fees like in the education institutions, etc. What might be their payments? Payment can be anything: stationery, salary, repair and maintenance, etc. These are their all payments. So I can say all the receipts would be their incomes and payments would be their expenditure. So for this type of concern, we use two accounts, receipt and payment account, as well as income and expenditure account. So income and expenditure account is nothing but your P&L account itself. Receipt, sorry, income and expenditure account is nothing but your P&L account itself. Income is your profit, expenditure is your losses or expenses, right? In the same way, receipts and payment, it is nothing but your like a bank account or a cash or bank account. Okay, whenever any amount is coming, that is a receipt. Whenever any amount is going out, that is a payment. Does that mean that every receipt is an income? Answer is no. Not every receipt is an income, because if they sell a building, so that whole receipt won't be an income. Only the profit element would be the income. Okay, let's say if the building was purchased for 10 lakh and it is sold for 2 lakh. So the income is only 2 lakh rupees. But what is the receipt amount? The receipt amount is 12 lakh. That is the difference. Income is 2 lakh, the receipt amount is 12 lakh. So that is the difference between receipt and your income. Same way, payment can be higher, payment can be lower, but expenditure is only that thing which is for that particular year. So we use typically these two type of accounts. These are the special items which they have given, which I have just discussed. There would be some revenue items and there would be some expenditure items. That would be donation, entrance fees, subscription, grants received, or expenditure is upkeep of grounds to maintain the ground, football field, cricket field, etc. Tournament expenses if they are doing some tournament, prize, events, everything. So they need some special type of accounting in that case. Okay. So for their financial account, we will not prepare that traditional P&L account or the balance sheet. Balance sheet would be there, but the P&L account would be replaced with income and expenditure account. Your P&L account would be replaced with what? Income and expenditure account. So that is the typical change when we talk about the financial statement of non-trading concern. So non-trading means there would be no trading account. No, nothing of trading is required. No trading is required. Okay, direct the income and expenditure account. So, so what would be the features of the receipt and payment account? It is an account which contains all the cash and bank transaction made by a non-profit organization during a particular period. It starts with the opening balance. We have the opening balance for this as the cash and bank account. All the cash receipts, both capital and revenue during the period are debited, because obviously the cash come in, we will debit, cash will go out, we will credit. The cash payments, both capital and revenue during the period are credited to this account. It ends with the closing balance of the cash and bank balance. So because obviously the opening balance of the fund, whatever is coming in, we will add, whatever is going out, we will minus. So the closing balance would be the remaining fund which is available in your cash and bank. So while recording the cash and bank transaction, all the entries are done on the cash basis. That means on the cash basis, whenever it is actually received, that we will record in our receipt and payment account. The same we do in the cash and bank account also. It is the summary of a cash book, and it follows a real account, because obviously cash is an asset for you, and asset is a real account, not a nominal, not a personal account. So that is why it follows a real account. That means debit what comes in and credit what goes. Now let us talk about the income and expenditure account. It is the same thing as a P&L account. So it is a nominal account. It will have the profit on the credit side, or I would say income on the credit side. It will have the losses on the debit side, expenditure. Okay, so just read it out about the income and expenditure, and then we'll talk about the your rest of the examples for this type of financial statement. So you have 10 minutes, just read it out. Done all of you? Yes or no? Please comment and confirm. Have you been go through all the points? Shall I move ahead? Everyone. Done, sir. Okay. Perfect. Thank you. Now, let us discuss the standard format. What we need to emphasize on for the receipts and payment account, and then we can move forward for your questions. So see, my dear, here is an example where you have the receipt and payment account as well as income and expenditure account. Your receipt and payment account, as I said, it is just like your cash or bank account. So whenever you have any receipt, that means cash in, you need to debit it. It will start with the opening balance brought down. That is the starting point over here. Then we have all the receipts, which is capital or revenue, which is coming over here. Okay. It may or may not be related to the previous period. Then we will have current period receipts and subsequent periods receipts as well, which is received in advance. On the credit side, whenever the cash or bank, the funds will go out, that will be considered over here. So all payments, whether it is capital or revenue, or it may be related to the current period or the subsequent period. And at last, the balance carried down, the remaining balance at the end. So we'll have a starting balance, funds coming in, funds going out, and the closing balance. So that is how your receipt and payment account will work. Coming to the income and expenditure. So all the expenses will be on your debit side, just like your P&L account. Okay. And then all the income on your credit side. So all the revenue, only revenue expenses, not capital expenses. Okay. And all the revenue receipts. And if there can be two cases. One case is that your income is higher and your expenditure is lower. For example, I have 1 lakh rupees of income and I have 80,000 rupees of expenditure. That means I have left with rupees 20,000, and that is called surplus. Surplus always mean excess of income over expenditure. Sir, can there be a reverse case possible? Yes, my dear, there can be a reverse case possible, because in business also we have losses. So how there will be losses? Just the reverse case. Income is less and expenditure is higher. So let's say we have an income of 85,000 and I have an expenditure of 1 lakh rupees. So in that case, the income is high, income is low, expenditure is high. So there would be deficit. Deficit means shortage. Okay, so what is deficit? Deficit is nothing but excess of expenditure over income. So whenever there is a surplus, you can say it is just like a profit. It is just like a profit. It will come as a balancing figure on your debit side if there is a surplus. Surplus is shown over here. But if there is a deficit, just like a loss, it will come on the credit side. So this would be your balancing figures. Okay. So if somebody asks what is the difference between receipt and payment account versus what is the income and expenditure account, we can say it is just a cash book, but it is a P&L account of a, it closely resembles with the P&L account of the trading concern. Receipts are debited, payments are credited. So whatever we have learned just now, this is the overview. You can have a look later on. So this is about the differences between the two. And there would be some differences between your P&L account as well as income and expenditure account as well. You can again have a look for this. This is the simple theoretical things which you can see by your own. Now let us talk about some fund accounting, fund asset accounting and its peculiarities. Okay. So two types of fund there is possible. First, they have a capital fund, which is basically nothing your capital, just like your capital account. Okay. And then we have some special fund. Special fund are used for some specific requirements only. For example, for example, we are talking about a club. Sir, what club where we dance? No, 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 no. Sports club. Okay, just to keep you informed, sports club has several events, and in those events, they organize some tournament. So for organizing such tournament, they need some fund. So they ask all the members, let's say A, B, C, D, E, F, G, and H. Let's say these 8 people are the members in this club. So they will pay each for the tournament. Let's say everyone is asked for rupees 500 per person. They have asked for rupees 500 per person. Now, whenever we will receive this 500, is this 500 earmarked for something? So what do you mean by earmarked? That when I take this 500 from all of these, have I said anything that what I will do of this 500? I said yes, sir. I have told them from this 500 we will organize the tournament and you can participate in those tournament. So this 500 contribution is not a general contribution. I cannot do let's say New Year party with this, a Diwali gift with this, or renovation expenses with this. This can be only and only used for tournament. This can only be used for tournament. So if this can be used just for the tournament, let's create a fund called tournament fund account. So this is basically an asset for you. Out of this asset, you will make expenses related to only and only tournament. That means all the tournament expenses will be paid out of from this fund. Are you getting my point? Yes or no? Okay. So if it is a tournament fund account, it is an asset. All the tournament asset, all the tournament expenses will be paid out of from this fund. So can I say that whenever the funds are coming in, my bank account will be credited. I have received 500 rupees from 8 members. That is 4,000. Bank account is being debited with 4,000 to what? To tournament fund account. That is 4,000. Okay. So if I am crediting this tournament fund account, how can I say this is an asset? Because asset is what comes in. Bank account is being credited and tournament fund account is being debited. That is a logical way. But in actual, I have received this amount. So bank account will be debited. That is the correct. So tournament fund is just an amount which we have collected from the members, and this amount is not of my own. This I need to use for the purpose of tournament. This I need to use for the purpose of tournament. So in actual, people think that this is an asset, but in actual, it is a liability. You have to use this for the purpose of what? Arranging the tournament. Just like a capital is your liability, in the same way, this is a special fund. This is a special fund which is used for the tournaments. And whenever I will make payment out of this fund, my fund liability will go down. For example, out of this 4,000, I have made 3,000 rupees expenditure in the tournament. So 1,000 rupees is left. 1,000 rupees is left. So my liability has gone down by 3,000 when I am expending from this fund account. But if somebody else is contributing to this fund, so the fund account will increase. Okay, so this is a separate specific fund which we are creating. Whenever we have some expense, we will make it out from that special fund account. So if I am doing some tournament expenses, so that tournament fund will be debited and bank account will be credited when the when the expenses is being done for the tournament. Okay, and it is shown as a liability, your special fund. For example, all the tournament is done. Tournament is now end. I have received 4,000 for the tournament and 3,000 is spent it. So the balance 1,000 is now can be used for other purposes. It can be used for other purposes because the tournament is over. So what I will do, I will transfer all the special fund balance to the capital fund account so that I can use it for another purposes. Okay, but from this remaining thing, remaining fund, I have got some machine. I have purchased a machine. Okay, Let's say in the gym, I have purchased one machine. What I will do in that case? So my asset account will be debited and the payment will be made from the bank account. And I will also transfer the same amount from the special fund account to the capital account so that my special fund account is closed. So my asset will be increased by 1000, payment will go out of 1000. From my special fund account also 1000 rupees will get out and it will go to the general fund, that is the capital fund account. Okay, so this is the treatment for special fund related activities where we can see that this type of calculations are very, very important to do in one fund. Why one fund? Because I am getting earmarked money. Sir, what do you mean by earmarked money? That means it can be used for that specific purposes only. Have you ever visited some of the shopping malls or shops where they keep one box, donation box outside, and they write on the box that this is for the donation to, let's say, deaf and dumb school or old age homes or the pet clinics where they take care of the animals and everything. So when you put money in that box, that money only goes to that particular activity only. The shopkeeper cannot create the furniture out of that money. It is earmarked for specific thing. So in this clubs also, educational institution, hospitals, they keep some funds for some earmarked purposes so that they can use it whenever there is a requirement for that. Okay, so that is the idea behind this. You will understand more in detail when I do some questions relating to this funds. We will try to cover some of the questions relating to the basic elementary ones for the fund level, and then we can move to the full-fledged questions. That is the part remaining in this chapter, and by that I think in a couple of lectures, couple or 3 or 4 lectures, your this chapter would be closed, and we will be on the last knockings of the remaining 2 chapters of your cash flow statement and the ratio analysis. Okay. Any doubt, anyone? So you have your homework. You need to try some of the questions of your final accounts. There are many illustrations which you can try by your own. If there are any doubts, we can take it up. Otherwise, every concept in that particular things are covered right now. Okay. Thank you all. Have a great day. Bye.